Hey everybody, welcome to the stream. Welcome to After the Close is where we're at the moment. And of course, we've seen some pretty big sell-off in this close. We've actually got some confirmations to the downside here on a couple of indices. So let's just talk about that in a second. Let's also talk about the massive volatility we saw because we got back up to the exact same point that we knew was resistance. Look at this. We rolled in. The Nasdaq went up to the resistance, sold off the exact same point, and then now we've tripped underneath. And that's not exactly a positive sign. As we know, this kind of instigates quite a few things. We've begun the head and shoulders pattern. So here it is. Let's go with just the neckline component, which is about there. Take the distance, and then, of course, extrapolate that out. So we now expect further weakness to come in through the market. We obviously are now thinking about this 20 moving average here, which is down in this zone. It becomes more likely that this is where we're going. Is it time to panic? No, because of course, whenever we are moving, in general, we want to stay above that 20 moving average. That's the key to not really panicking throughout this market. Now, could we expect some spikes downwards of possibly even the descending or the ascending channel in this case? Absolutely. This isn't exactly a good close for it. And you can see it's just continuing to sell off after the market's closed here. So hopefully nobody's being hurt massively by it, or they're not expecting these types of things. We are sitting here at 15,877 on the Nasdaq. US 500 has also closed below, which is probably the most important index. Let's have a look here. SPX moved below, now trading around 4,500. Let's just bring up the options for this week. I want to get that straight in. Let's get the updated number there. We need quite a lot of different bits of information today, so let's just grab that. Okay. We will have the non-farm payrolls number, which actually might even stabilize the market, coming out on Friday. Maybe the jobs number in the US. Okay, let's have a look here. So we've got about 450 is probably the bigger amount of puts. So for this week, we would hope that actually kind of holds here. This is the main zone, 450 on the puts. So if we check the SPY, let's have a look at the SPY together. Now, the reason it's gone down here is a bit of a crock. I mean, that's not a surprise. What is it like? Well, the reason I'm seeing on the media is like this Omicron's in the US. I mean, it's going to be in the US, guys. it's not unknown that it's going to hit that area. We still don't know everything about it, and that may be the reason. Could be inflation, could be whatever you want, could be just scared by the market. But this is a close underneath. It's going into 450. If we go and have a look at the weekly, which of course we know is the most important kind of moving average, we can then see that it's very close now to tapping that weekly. Now, a closure underneath this weekly, guys, that's actually one of the biggest signs we've seen this year. If that happened and we got underneath, well, then we talk about the 50 and we start to, really worry about a really big pullback all the way down. This would be certainly not a Santa rally, because at that point, you're talking about a 10.76% pullback in the markets. And that will not make a lot of people happy. So 20 moving average is the key. We're about there. We're about on support. We have certainly closed underneath and we're selling off a little bit, but I'm not sure I'd be like hugely worried about all of this just yet. All right, let's have a look here what everybody is saying. To Cooler Kevin says, Tom, be honest, you were selling. All right. No, I wasn't doing anything that much. I was very much not doing that many things. Gary says, give me your blessing to panic buy tomorrow. Fair enough. Yeah, well, we're going into a pretty key level. 20 moving average is certainly a zone that I always look at quite a lot. Someone said AMC broke below the 200 DMA. Yeah, so the AMC trade seems to be gone. You can see here it's now underneath the 30. I mean, just the sentiment is just knocked out of this market. People have finally moved on to some other things. And if you think about it, it just makes sense. This is eventually what's going to happen. People will eventually start dropping the holdings. They're moving into things like crypto. They're moving into other massive assets that they like. And this is just taking out some of the steam. If it's not worth this price, which frankly it isn't, It's just because everyone was holding it. Eventually, everyone will give up on it. And look, it'll have its spurts back up. It'll have, people get interested in it. It's always worth watching. But this is a huge breakout down below, and you could see it now going all the way back down into the under 20s. This is not a positive sign for this stock. And the same thing for GME. I mean, it's going right back down. Maybe more bag holders here, actually, the original movement. But you're looking at that 168, and then breakdown below that would be a big deal. Now, interestingly, some of the stocks that were hit biggest, other than these two, were stocks that were completely overpriced. So stuff like Net. I mean, I love the stock, but this actually is really turned here. It's a positive sign, I say, for the markets. I mean, if you have something that goes up 100% and then it reports okay, but it reports pretty damn well, but it just doesn't justify it. For that to pull down is actually a good thing. Let's have a look at CRWD, CrowdStrike, another one that's overpriced. It's pulling down heavily, back down to 200 now. So a lot of people will say, well, this is bad. These are bad stocks. This is what happens with hypergrowth stocks once the market starts to question their earnings, or they slow a little bit on their reports. These stocks are being traded so high above, like PS ratios out of control, that this is what happens. They drop huge percentages, and it's actually down around, let's just show you here how much it's down. It's down 32.56%. But as you know, to now go back up would be about a 50% gain. So I'm sorry if you're in these types of things, but this is what happens often. Let's have a look at the Tesla trade from today. It didn't quite do anything we really wanted, did it? We were expecting in the morning a bit heavier open. So, it's about right, but about 1170 on the open here. Long leg dojis in the first 2 hours, and then rejects, and then, of course, gets through the 1100, back down. Now we go towards 1000, you would think. Maybe we stop at around this level here, which is 1063. That'll be an interesting point of support for the previous session, but we could be going all the way back down to 1000, finding buying pressure there. There's a lot to discuss here. I mean, there's so much stuff that's down. I'm not panicking. I don't think it's worthwhile panicking, but you've got to realize that it is a big closure. It's across all of them. QQQ. We've got that new closure down. I mean, this is a head and shoulders. There's no doubt. I mean, you've got the left shoulder, you got the head, you got the right shoulder. You've got the closure underneath. That's the confirmation. It's not easy to short markets. Shorting markets isn't easy, but that's not exactly a positive sign. And I think that things like the weekly, specifically the weekly 20 exponential moving average, become very open. Let's see what the chat thinks, though. What do you guys think? Tom, you sound like you were long beyond meat. What do you mean? Oh, you think where is beyond meat? Let's have a look here. Oh, that's really bad. No, I don't buy this stock. PK Subman says, I gambled on CRM earnings and I got smoked. The best way to gamble, if you're going to do that kind of thing, PK, the only way to really do it is by sticking with the idea of using maybe a short dated option. Okay. Because otherwise you'll get really badly hurt. If you're going to gamble on earnings, then yeah, that's the way you've got to look at it. A lot of people say market is overvalued. Anthony Bates says bought UVXY when it was down 15%. Bam. Fair enough. Temporary down market will flush out by the end of the week. Yeah. Farrell said, I think I blew my account up. Haha. How's that possible? Lots and lots of leverage, I guess. Sorry to hear that, sir. Is messing with you, you hate Beyond Meat? Yeah, I do hate this stock. That is true. This stock is got the words. Well, let's see if the chat remembers why I don't like this stock. Chat, tell me why I don't like this stock. There's one word. Let's see if anyone knows. Madeline says, I think I'm going to set my laptop on fire. Surely it's not that bad. Let's put these things in perspective, guys. Okay, the market's coming down, but US 100 is still ridiculously priced. I mean, it's still very, very high. Let's think about it. From the rally that we had here, we're still up 10.15%. From the top, sure, 16, but still 10.15%. We're still above the September highs. I mean, we're still looking pretty healthy. People say IPO. No, Chris has got it. Good one. Beyond Moat. That's right. The moat is the big thing here. Hey, Barack. Good to see you here. I closed my QQQ puts last Wednesday. Oh, that sucks, Garrett. Fair enough, though. I see why you may have done that. Look at the monthly candle in the S&P. Oh, I know where it is. It was just going to be my video for today. I was going to talk the monthly anyway. But yeah, follow through here. Monthly is a giant shooting star. Now, I have talked about this before, though. The monthly shooting star, while it looks scary in principle, we in generally have not seen it follow through. So we haven't seen it follow through here. We obviously see it follow through here. It doesn't win me over just having a monthly shooting star. And I was going to talk about that in today's video because while it happens, there's one there. And often it can short, like here. In general, there's also been a lot of examples where it's kind of gone straight down, then bulled back up. So I'm not won over by the monthly shooting star. But when you get that follow through, yeah, I mean, it tends to do it. Look what held this one up, monthly 20 in this case. So it shorted off temporarily. Next month was weak, and then it went straight back to being a bull. There's one there. Went bullish, almost closed above, didn't, and then ended up being a very bearish thing. Now, this is from years ago. I mean, that's back in 90s. But yeah, it's rare. It happened here, obviously false break, but it has happened a few times during this rally and not sold off. I'm not won over by it, but it is there for sure. Look, compelling. There's a lot of compelling arguments to say further weakness here now. I mean, you've sold off, you've done the rallies, you've retested. Let's have a look at the rally here today during the hour of power. So we rally early, we sell off this exact support zone, which is now becoming resistance. You got a 200 SMA, you got a 50 SMA, a 50 EMA, sorry. And then you break down and you make a new low. So you get that sell off initially. This is the problem with you couldn't swing trade this very easily. You would have got belted up. And that's why I say when the VIX is above 20, we don't look to swing. And the VIX is huge now. It's sitting at 31.13. So the market's taking this pretty seriously. It's going, okay, I'm pretty damn scared. There are heaps of stocks that we could look at, and you could say, oh, let's look at all these stocks and everything's down, and there's heaps and heaps of movements, and there's lots of exciting buys. But really what you're trying to do now is you're trying to pinpoint which market is going to find support. Where are we going to find support? Have we just found support for the next session? I would guess that you're going to see some buying here after the close, but now you have to watch this zone. So see on the S&P 500, where you're going to have to watch now is the 50 exponential moving average from the bottom up to the top. And then you're looking for that turnaround again, possibly go down to something like the weekly 20. And this could fill a lot of gaps as well. Because remember, this is the futures market. So if we have a look here at the SPY, look at all these gaps that we originally had. So we got gaps all the way through here. Again, weekly 20 is close. So if it does dip underneath this, we're hoping for rallies by the end of that week to get it back above. A closure underneath the weekly 20 is not a good thing. And we are very close now. Can we take a look at gold, Tom? Yeah, we certainly can. Can you check out Crowd After Hours? Yeah, we have a look at CrowdStrike After Hours. After Hours is up 2.73%. At $200, now 207. And you would expect quite a few of the after hours because we hit 4,500 on the S&P for some buyers to come in after hours. They'll be looking at it saying, okay, cool. Even though everything's looking negative, it's getting close to my 20. I like my 20. And maybe they're potentially looking at buying that zone. The news getting it through. Let's actually have a look at it together. Okay, so let's click on the news button. Let's refresh. Okay, Wall Street closes lower as Omicron and inflation worried investors. Okay, so I'm not really too sure about that. This is not surprising. Not surprising, of course. Let's do some Control F. Comma, okay. Inflation, okay. Interest rates. Analysis, trillion wager that interest rates won't rise far. Yep, I tend to agree with that. Won't raise that much now, especially the more the market whinges here. And then, of course, the other word you'll be looking at is taper today. So a little bit of taper, mostly inflation and the OMI thing. Same stories every day. Yep, pretty much. Yep, looks like that way, Terry M. And I think that's very important to really analyze here when you're looking at the markets. There's the heat map for today. I just refreshed it for you guys. CRM down the most. Earnings here, pretty bad. Went down a lot. PayPal, all that rally was dropped off again. Tesla down 4.35%. This one's actually up here. Semiconductor AMAT up a lot. Nvidia down 3.8. Apple, Microsoft, Google, the big stocks being used as defensive components for today. And let me just quickly bring you up the sectors. So let me actually bring you up the sectors and show you which ones were performing well and which ones were performing poorly. One sec, I'll just grab it. Okay, so here we go. XLC, again, one of the most biggest underperformers. Today was a movement into defensives. You can see here XLV, XLP, XLU, all defensive components. The least amount of drop. And it was a sell into the close, which means Wall Street was all part of it. That was the Wall Street nastiness. Another trap for retail, guys. Don't trust the early rallies. You never can. During high volatility times, this is where retail is. This is where Wall Street is. They punish you. And that's why these early rallies need to be taken with a grain of salt a lot of the time. Where's the cash going? Yeah, it's an interesting thing. I mean, DXY's bounced a little bit, but there's not that much movement. Let's have a look at the bonds. Bonds certainly have taken it. So this is the TLT. We'll talk about this today. Big level here. You'll notice the bonds suddenly spiking up there, getting right back into resistance. So I think there's a bit of money going into the bonds at the moment. And then the US 10-year, that's actually dropped straight back down. So you'll notice there's this story of inflation. Yet the 10-year is going down hard, which is showing us that everyone believes that interest rates are now not going to be raised at the same rate as which everyone thought. Which I agree with. I don't think they are going to be raised at what everybody thought. Hey, we still on for the Santa rally? You really could be. You'd be surprised how fast things can turn. TLT is the most interesting chart, yes. It's right at that resistance. And if you notice, you've got kind of like a lot of touches here. It's come back up with the double bottom. It looks like it's set to bust it. It's actually busting it post a little bit, 152.24. People, you gotta always put it back in perspective, guys. You gotta put it back in perspective. How freaked out do we have to be at this stage, based on everything that you know? Okay, so as you get more information about this OMI thing, that will really assist you with making a better decision on the charts. The 20 moving average certainly is something we want to be focusing on heavily this week. And if it doesn't bounce off this zone, it closed underneath. Okay, cool. Well, we can talk about the 50 moving average there. And that certainly becomes very open. If you prefer to wait and see approach, then you'll have to see how it interacts with this 20 moving average. That's the key here. Bitcoin, still floating around. I mean, obviously, Ethereum has dropped a little bit here. Let's go to the daily. Dropped a little bit, but still holding up very, very well. Bitcoin's dropped down to 56. Weakness candle here coming through. We still look for it to close past 60. It's kind of hovering in this zone. It's getting hurt a little bit by the market weakness. So if we go to the 4-hour, yeah, not great, but just channeling around, just stuck in that zone. Let's get rid of this. We don't need this on there. So yeah, it's just kind of channeling around this area. 60K plus breakout, we remain. That is the most key point here, and we move up. And in some places, people will be looking at this now and they'll be saying, okay, let's get on that. Let's get on that 8-hour. Do we have like a massive left shoulder head, right shoulder kind of component and move through? Absolutely. Absolutely, we could. And 60K it's all about 60K for this one. The stories for today: VIX is really high. Crypto still looking relatively okay. Gold is floating around the exact same zone, hasn't done anything. We look for an 1810 break. Nothing's changed here. So nothing changed. Gold's just hovering. Could be a false breakout to the downside. If it rallies hard, that would be good in the next 24 hours. And I think that's probably very important to be looking at here on gold. These dailies still look absolutely hideous, though. We need to remember that. Rejection week, rejection week, rejection week, rejection week. It doesn't look strong. So you have to be more reactionary than predictive here, because this looks hideous on a chart. It just does. Like when you scroll this in, it's just not good. Just not good. I'll be making a video fully recapping this today. Unfortunately, I do need to go. I have to keep it a little bit short today, but don't worry. I'll be coming back in a few hours with a video covering the entire market. I'm sorry about the stream today, guys. Usually we do cover everything we can, but I don't think it's time to panic. I think it's time to basically sit here and really focus in on the things that matter, which is going to be the weekly 20 moving averages, the 4,500 in general, just to see how these puts interact with it. We've got non-farm payrolls on Friday, which will really show us the turnaround story. And the news is mostly just fighting us. It's not the news. If they were all crazy on inflation, then we would also see the US 10-year going ballistic at the same time. So, yeah, I don't think that's the real story. I think this is a pre-Santa sell-off. We've had it before. I'll make a full video, cover it then, and I'll see you very, very soon. Thanks, guys. Looked at gold and silver. We'll check that out. Okay, I'll see you very, very soon. Catch you for now.